The game for online sellers has gotten a lot more competitive. The free money that was funding startups and the subsidies that drove massive pandemic-era online shopping are off. The soaring costs of reverse logistics, in fact all logistics as well as customer acquisition, is on. It's definitely gotten a lot hotter in the e-commerce arena, and retailers are now a lot more worried about getting burnt with losses than driving record-shattering top-line growth. The market dynamics have clearly changed. To succeed or just to survive, e-commerce players need to rethink their strategy. But first, they need to truly understand the underlying issues that are shaping e-commerce right now. Meet Rick Watson, a renowned e-commerce strategist, consultant, and influencer who helps private equity grow digital revenue streams. His work with e-commerce investor due diligence and acquisition analysis has given him a unique behind-the-scenes look at what's working, what's not, and what companies might want to do next. I'm Jane Singer, and welcome back to A Seat at the Table, where we expand our vision of the opportunities and possibilities in today's fast-moving global business world by speaking with the people who are making things happen. Today, Rick Watson will be discussing what e-commerce players should be focusing on right now in order to not only drive sales, but to build their bottom lines. He'll also be talking about, when faced with the return to stores, what people who manage e-commerce channels should be looking at right now, and opportunities or potential challenges that e-commerce businesses might be overlooking. Whether you're a pure e-commerce play, strictly offline, or a multi-channel business, to succeed, you need to have the right people in the right positions. That's a lot easier said than done, especially now when unemployment rates are at historic lows in many markets. Finding the best talent is a skill that takes years to hone, and so most companies work with an executive search firm like AsiaNet Consultants to help identify the best candidates. It's really amazing at how game-changing having decades of experience and a massive network of potential candidates can be when you're trying to find people with highly specialized skills or precise experience. I've seen AsiaNet fill search assignments that I figured would be impossible to fill. But I guess that's the benefit of having a top-notch team that's truly connected to the market. They know a lot of the non-obvious candidates, those hidden gems that many other companies overlook. You can learn more about AsiaNet Consultants over at their website, asianetconsultants.com. I'll also drop a link in the show notes for this episode. Meanwhile, let's sit down with Rick and take a backstage look at the current state of e-commerce. Thank you so much for joining me here on A Seat at the Table. I am so excited to hear what you have to say around e-commerce. A lot of people in our listener audience are asking about this. They are trying to figure out how to get it right. Everybody realizes that e-commerce is a critical channel, but there's a lot of confusion around and a lot of frustration on what we should be doing now.
Yeah, definitely. I think we've been through I think we've all, outside of e-commerce and inside of e-commerce, we've all been through a strange and crazy couple of years. So, e-commerce is a big part of that for all, for myself and a lot of people in the audience. So I'm happy to chat with you about these topics today.
Yeah, well, I mean, you're the expert on this, and I think that's great because there's a lot of conversations about it, but a lot of people they're more speculative than people like yourself who've really had your hands in the clay.
Yeah, definitely. I mean, look, there's a lot of topics. I would say in 2021, in 2020, everyone was an e-commerce expert.
Right.
It was easy to fall out of bed and, start a $1 million Shopify store. And I think one of the things that people are finding out is that, well, maybe it wasn't that I'm so smart. Maybe it was actually that all these retail stores were shut down and the customer acquisition costs were artificially reduced. And so now I need to change how I think about the business, my business, as well as the customer generally.
Yes, absolutely. I mean, I couldn't have said it better that during the pandemic, people just got lucky, so to speak. And, now that stores are open, people have to get smart.
No, for sure. I mean, as we talk about stores, it's hugely important. The reality is there are only so many people, especially for a new brand. It kind of depends if we're talking about kind of an older brand or a newer brand. But certainly a newer brand, the only people who know about you are people who learned about you recently, sort of the trends, the trendsetters who are looking for something new and fashionable. And if you're not in stores, the most of America isn't going to know who you are, because that's where 80% of shopping is still happening. So, 80% plus. And so I think that's the first thing that people who kind of grew up in this e-commerce bubble um, are starting to painfully realize, and it's causing I think, on some uncomfortable conversations.
Yes, absolutely. I mean, I think you're right. Customer acquisition and reverse logistics seem to be the two biggest threats, or at least what most e-commerce businesses are identifying as the biggest threats to their business. Now, in your opinion, what should e-commerce players be focusing on right now in order to not only drive sales, but really to shore up the bottom line?
Yeah, look, it's a good question, and the funny thing is the answer is kind of buried in your question a little bit. Is like, first of all, you should be focused on the bottom line more than the top line right now in this environment. And the short answer for that is that costs are rising faster than sales for a lot of companies. And you just look at um, something as simple as carrier rates for printing shipping labels and doing end-to-end fulfillment service with FedEx and UPS. That's increasing something like 9% year over year. So that's cost that comes right out the top. And most people aren't passing 100% of those costs on to customers. And so you have to find that money somewhere. And so I think the big places are supply chain, which includes carrier costs and then labor generally. So let's just talk about employees. Most companies are trying to get more out of their existing employees and have them do less, or I mean, have fewer employees and have them, basically take on more responsibilities. So this is causing existing employees to be more stressed. People are trying to employ software to make processes more automated so that they can get more out of their existing employees. And then as far as carrier costs, clearly, if you run your own warehouses, labor is it's very hard to attract and retain employees, and those kind of rates for, hourly rates have gone up. But then the carrier costs generally, which I alluded to earlier, and a lot of the solution for that is really trying to get your product as close to the customer as possible. And the big driving force behind that is approximately 40 to 50% of all supply chain costs are in the last mile, which means that you got it, within a mile or two of the customer, but now you have to like get it to their doorstep. And that's a much more expensive proposition than doing a long haul ship, across the country generally, at least on a relative basis. And so if you can reduce those last mile costs, and get your product closer to customers by distributing it more locally and in more than one centralized warehouse in the country, and having 3 or 4 at least, so that you can have cheaper 2-day service, that's another way to reduce your carrier costs by splitting up your inventory.
We're going to take a quick break now, and then we'll be right back.
We were hiring when we were making 50 to 100K monthly losses.
And why? Welcome to episode 1.
I can't think of a single founder who's been around for a decent amount of time in business who hasn't had their tunnel of year. This was that year. We're going to be okay, yeah, Sheree. Some are going to hear this and think, you TDP. But hear me out. You only have to do the math to understand that very soon we were $500,000 down.
Right, right. I think that a lot of retailers are starting to try and implement that if they already have a physical store. But I suppose they also then have the issues of how do you manage inventory. What might be some practical things that are coming into that? Are you seeing, ways that you see people handling this that you think, wow, that's pretty smart?
Yeah, I mean, look, a lot of people treat their kind of e-commerce store as the hub of their operations. But historically, that's been where inventory comes from one place. And so to the extent that you're a multi-channel seller and maybe have inventory in a number of different warehouses. You might be in fulfillment by Amazon, you might have your own store. That actually starts to increase the need for something called inventory management software. So you have to know where all your inventory is and ensure it's close to customers and have accurate inventory counts so that you can power, all of your digital, online and store experiences so that your customer has a good experience. You're able to understand what you're able to promise them at the same time. So I think retailers that have not managing their inventory in spreadsheets have a leg up on a lot of brands, which, again, when you start a brand, you start with usually the most bare bones things you can. And you try to get things in an online store, and then maybe you set up a local store, or you try to get your products into Target or somebody like that, and it might be on a trial basis. So people kind of grow as their needs evolve, as their channels and their inventory needs evolve too.
Yes, yeah, that's very, very true. Now, do you see, touching on this massive cost of, like you're saying, this last mile delivery, and probably that's been exacerbated by everybody trying to compete with Amazon Prime and not only make it fast, but make it lightning fast, right? I think Amazon can deliver in some places within the same day.
Right.
And overnight has almost become expected as a Prime member. So everyone else is, that sort of raised the bar for what people expect. Do you see more companies, or would you suggest more companies look to collaborate amongst each other and sort of share, it's not channels of distribution, but supply chain assets?
It's interesting. I have seen a couple of these sharing concepts. I think experimenting them is useful. I do fundamentally believe, there's only so far that can take you, because ultimately, if you're sharing assets and you're not in full control over that distribution, someone else is controlling it for you. And so, if you call them up and you're like, well, why did you do that? And if the answer is ever, well, the other customer that I'm sharing this for wanted this and you didn't, then you have a problem. And so I'm not saying this could maybe happen in every situation, but to the extent that like you're an important customer and you're working with a 3PL that maybe can help distribute your inventory in 3 or 4 places, and they're doing a good job and service for you. 3PL is almost like a 4-letter word in the e-commerce world. It's very hard to find a good 3PL sometimes, and if you have a bad one, it because you wake up every day thinking about like, oh, I got in a whole bunch of orders because one of my TikTok videos went viral, and when are these orders going to go out? And so that's a challenge that a lot of brand owners solve, and having a dedicated provider that with high SLAs you can count on is, to me, one of the most important things for that.
Right, right. So then you would really encourage people who are serious about e-commerce or have a fairly large e-commerce business to look to mimic to some extent what Amazon has done, which is try to build out their own logistics platform.
Well, what I would say is, ironically, mimic is a good word, but build out is probably not what I would recommend, just because obviously it's very expensive to build your own warehouses. And so if you're, big in terms of like over $1 billion, yeah, you can start to think about that. But almost everyone below that number should be using third-party logistics providers off the shelf. And meaning that there are many companies that already have warehouse and logistics services and software packaged in one place that you're like, okay, I'm over 100 orders a day, or but I'm not. I can't ship out of my garage anymore. I can't ship out of my kitchen table anymore. But I'm also not Walmart. So like, what do I do in this in-between space? And a lot of times it's finding the right partners for the stage in the journey that you're on. And particularly if you're growing quickly, some flexibility is important because your needs might change quickly. And so I think some of these third-party logistics providers, out there can provide this kind of flexibility without the upfront capital costs.
Yeah, that's very important because, like you said, the capital involved in building out your own logistics is just massive. So it is not within reach for many, many players. What about what Amazon is trying to do, enabling other e-commerce players to? I believe they're letting you use their not only fulfilled by Amazon, but it's what are they calling it now? Shipped by Prime or something like that, right? Even if it's not sold on Amazon's website.
Yeah, they have a new program. Fulfillment by Amazon was started something in the 2005 timeframe, and its goal is how to give sellers prime level service, which means basically 2-day date definite delivery or something in that neighborhood. And that what that really did for Amazon is allow them to scale their overall e-commerce business because they didn't have to hold all the inventory themselves from an ownership point of view. They could say like, okay, third parties, we're going to charge you to use our great logistics because we already need this great logistics. So let us give you excess capacity. The new program you mentioned, Buy with Prime,
Right.
what they're trying to do is ask a couple of different questions, which is like, can we allow direct to consumer brands to sell to existing Prime members without having to sell directly on Amazon? And the way they're making that um, proposition available to a brand is essentially you almost become a seller. I'm an Amazon seller without becoming an Amazon seller. And I know that sounds strange, but basically your inventory has to be in Amazon facilities to make that happen, because
Right.
otherwise
Yeah.
Amazon will never allow you to have the Prime badge because it could never be sure you're going to ship on time.
Yes.
So that I think that's the main thing. There are really two parts to Buy with Prime. One is what's traditionally been known as Amazon Pay, which is Amazon has a payment selection. So if you like check out on a third-party website, you could use your Amazon credential, your address and your payment methods that are stored there. But then second is because your product is already stored in Amazon's facilities, you're able to make a faster and better promise to your own e-commerce buyers.
Right. Right. How do you see that going?
Um, so look, it just launched about 5 minutes ago. I mean, in e-commerce terms, it
Right. Right.
launched, they announced it last April, but they did not officially launch it until January this year. So
Yes.
it's really early days. They have released some initial stats that said that they see a 25% conversion rate lift, and that is what they're doing. They have a long roadmap for it. I've written some reports about just to get my own sense of like, what is this thing now? Like Amazon is promising a lot of things, but what is it today? I know they have a big roadmap for it. And what I found is like very not so much a normal direct to consumer experience, meaning like branded communication emails from your store, like a box that's personalized and customized for your things, and very easy returns like you can get on Amazon. There's like I found more than once like some confusion between Amazon and the brand how the return is handled in this sort of hybrid situation for Buy with Prime. So I think they have some kinks to work out, and I trust that they likely have a very large team working on that.
Yeah. Oh, I'm sure they do. It's interesting that you brought up the returns because that really seems to be the elephant in the room, so to speak, at the
Right.
moment, right? Because I mean, on the you can sort of see it from both points of view. I mean, it's an awfully big expense for the seller, for the e-commerce player. You have a lot of inventory that's sort of that isn't sold but isn't in inventory, right? Because it's going to be eventually returned,
Right.
typically at your expense. But on the other hand, it is difficult, depending upon the product you're selling, for a consumer to feel confident to buy online if they don't feel that there's an easy return, a way to return it. If you have to pay for shipping, pay for returns, or even just pay for returns, that could be just more, that could just be enough to throw you off the bus, so to speak. I mean, how do you see all of that? What do you see as the resolution for that?
Yeah, look, it's a good question. Um, you know, all there are very few online only retailers that have solved returns. I mean, it's just the reality of it, particularly in apparel, because it's such a huge um, problem, where people buy eight, four or five things and return them all. because they're trying on different sizes and styles. Like retail is just so much more efficient than that. And so what I think, and I think this is sort of related to your earlier question, these are all part of the reason why we're kind of moving this from this era where people thought like, oh, e-commerce is going to solve all problems better than retail. And I think we're kind of moving a little bit more to a more nuanced era where it's like e-commerce does some things really well, but then it doesn't do some things well. And then on the other hand, retail does some things really well and it doesn't do some things well. And so I think to the extent that that brands can push returns to stores, then it becomes way more efficient because the consumer's already there. They're walking back into the store. It's very well known that if you get a consumer to walk into the store, their basket sizes are going to be bigger than just a single e-commerce purchase. The consumer's going to be happier because it's going to be less time. And so wholesale channels, I think, are important for that. If you don't have your own stores, getting in retailers that match your brand kind of focus, whether it's Nordstrom's or Bloomingdale's or even down market like a Walmart or a Target. Or if you're able to have a range of inventory, experimenting with your own storefronts as well, whether they're pop-ups or otherwise.
Yeah, I think you're right. I mean, I think that it is the only way that you'll be able to wrestle those expenses under control. And like you say, the upside is that when someone's coming to the store to return something, the likelihood they're going to see something in that store while they're there and buy it is probably a lot higher than if they're going to go on your website and try and fill out a return form.
Yeah, exactly. And I think, look, there's been a lot of said about these sort of re-commerce initiatives, and Rent the Runway has obviously been part of that, where you're buying, you're renting used merchandise, and it's a big logistics and dry cleaning business.
Yes.
And that's a very expensive business to run. Because you're always having to ship things both ways, and they've been trying to optimize that business for for year after year, but it's still not profitable. So
right.
The question is like, will it get there? And I think it's still the fact that it's still an open question tells you a lot.
Yes, I think that's a really good point, because I think that we've come off, maybe we're not 100% off, but it looks like we're heading to the off ramp of an era where there was just so much sort of free money floating around going into things, right? Where there was no one even cared
Right.
when you were going to get to profitability. And it allowed a lot of people to make, perhaps, I don't want to say bad decisions or sloppy decisions, but it certainly didn't force you, right, to have to make sharp decisions.
Right. No, I think that's right. And it kind of shows you the value of, a little bit more scrappiness and having, to do more with less is not just, everyone, every employee inside a company always wish they had more resources. But as
Right.
a business owner, you realize that's not always, the best thing, because you may be pushing the business in a direction that's not sustainable in the long term. And you're taking advantage of like a very short-term trend that might be an anomaly. And obviously as a business owner, you want to be around in 10 years because you can provide from all your employees and your family and everything else. So it's certainly a balancing act, because if everyone else is doing it, you don't want to leave all this money on the table. Like that's sort of your perception. Is like, well, why should I not do this if everyone is doing this? But it's a very hard decision to make as a business owner.
You're absolutely right. And I'm really glad you brought that up, because, previously companies died because they were undercapitalized. But I think, as you're pointing to, currently companies are in trouble because, in a sense, they've been overcapitalized.
I think that's exactly right. And I think you started to see certain industries, I think finance, you started seeing some of these. I think your some direct to consumer brands starting to see it. You're starting to see it in real estate this year. Certainly we've seen technology firms that got ahead of kind of their hiring practices, but I don't think we're done with it necessarily, because if you kind of think about it, interest rates really didn't start rising until March, April of last year. And we're really only a year out from that. And so the fact that we don't see interest rates going down anytime soon, in fact, consensus, whatever that means, they could go up one more time and then stay for another 6 to 12 months, which means that anyone who depended on quote unquote free money or 0% interest rates or something for like 4 years prior to that, we still haven't seen like the worst of it. You know what I mean? Like we're just starting to get to the point where we might level out for a while and not level out at a low number, leveling out at a higher number, which means cost of capital is definitely not going anywhere for a while.
Yeah, I would agree with you. I mean, I'm not an expert on the financial sector at all.
Yeah.
But I have a sense that we would be getting back to more expensive capital simply because everyone I've spoken to for the past, I don't know, it has to be at least 5 years. I mean, it was well before the pandemic. People are just scratching their heads as to how long this can keep going. It just seems to be a very artificial situation that's extended, and people just everyone's just sort of almost on edge, knowing that something's going to have to happen and not knowing when and what the impact will be.
Right. No, I think that's definitely the case. I think this year, I think is going to be particularly bad. Venture capital investing is down quite a bit off historical levels. I think even like private equity exits and fundraising are down, and those are the big prime movers in the economy in terms of if there are not exits happening, like companies, there are no companies IPO right now or going to the public markets. The only alternative is for you to get bought by another company, in which case that company has to be very healthy, has to have like a very healthy balance sheet to be buying other companies and looking for opportunities. Maybe Warren Buffett can do it, but there are a lot of companies that can't.
So are you expecting to see a lot of valuations go down in the coming year?
I think not only am I expecting, I think we have been seeing it consistently in the past 6 to 9 months. I would say it was very common even 3 years ago to see normal just software as a service valuations at 10 times recurring revenue. Now we're seeing valuations in the 2 to 3 times range. So like a 5x reduction in typical valuations.
Wow.
At the top of the pandemic, I was seeing Amazon businesses sell and direct to consumer businesses sell in between 3 and 5 times revenue.
Wow.
Regardless of whether they're profiting or not, just revenue. And now nobody talks about revenue-based metrics anymore, period. Number one, which is a big change. Second
Yes.
is they're talking about 2 and 3 times EBITDA. And so they're looking for profitable businesses. Most people are looking for profitable businesses that are above at least $500,000 a year in EBITDA. And growing and profitable, and so there's all these criteria now. And I was speaking with a venture capitalist last week that some of the VCs and private equity firms, anyone who acquired a company in the past 3 years, what I would say is they're all trying to understand, like, what is this thing worth now that I bought?
Right.
And so that's a big problem with existing retailer and private equity balance sheets. It's like, I told the market this was worth $300 million. Like, when am I going to have to mark this down?
Yeah, that's a huge balance sheet conundrum.
Exactly. Exactly.
And you're right. We just saw Walmart, right, sell bonobos for, I think, what was it, 75 million, and they had paid 350 million. I might have the figures all wrong, but it was
No, I think you're right on.
Yeah, so that was a massive devaluation, so to speak. And it really underscores what you're saying about how much people overestimated all these brands that had a lot of hype but didn't have the bottom line.
No, and it points exactly to the valuation metrics. So if you sold it for $300 million, chances are at the time it was about $100 million in top line revenue and growing pretty quickly. Now the revenue is more than double what it was before. So it's probably over a $200 million business. But I suspect, if I had to guess, and someone asked me, they probably are about $25 million in EBITDA and sold for about 3 times that. So
Right.
it just points to the valuation metrics and that change, and that's going to happen, I think, over and over going forward.
Yeah, I think you're right. And I think, now that it's become more expensive to service debt, you not only have less investors willing to take a chance on things, but likely people don't want to carry things when they're having to pay that much money to service that debt.
Yeah, no, for 100%. I think that's the case.
Now, when we get back to e-commerce opportunities, what do you think are overlooked opportunities? Are there things that you're seeing now that you're saying, well, gee, everybody's looking at this, but they should be looking at that?
Look, I think some of the biggest missed opportunities, I think, are now becoming clearer because in the past, and I think we've covered this a little bit, reduced cost of customer acquisition has covered up, basically clouded the judgment of a brand. So like, oh, well, I should only be focused on advertising. Well, the reality is you should really be focusing on like, do I really understand my consumer? Do I understand how they buy? Do I understand why they buy? Do I understand where they shop? Do I understand the alternatives that they're evaluating? To me, those 4 or 5 things are always the most important questions in any kind of retail, whether you're on the brand side or on the retail side, because that means you really understand like how do you make your money and how do you attract the next customer. And I think people lost focus a little bit on that. Like they were focused on like, oh, can I undercut the other person because I'm going to be able to grow? Your core value prop is really everything as a brand. So it sounds like a crazy missed opportunity, but I see it more often than you would think.
Oh, I'm sure. I mean, I see that all the time with established brands as well as indie brands or new brands. You're absolutely right. Nobody wants to do the unpleasant work of having to really go deep with customers, perhaps finding out things that they don't want to hear. Negative feedback never feels good to anybody. A lot of people fancy their customer as someone who's young and trendy, and then they find out that actually a lot of middle-aged people are buying the product, and I don't know why that bothers them. I mean, I'm happy to sell what we sell to anybody who wants to buy it, but it
Right.
appears that a lot of people, from comments I've heard, people are saying, "Oh, look who has my product," and they'll show me things on Instagram of someone wearing their product or holding their product up who's clearly not young and trendy, and I'd be like, "As a customer, man, I'd be just pretty happy."
Right.
And they don't. Then they're like,
Uh,
"No, we want these, young, trendy people." So that's how out of touch a lot of people are. And you're right. Nobody wants to do that dirty work of having to get on the selling floor or have to, in some way, reach out to people and find out what they really think of their brand or why they're buying it.
yeah. No, look, I mean, the tragedy is a lot of these, big retailers, even if you like go outside of fashion onto like Bed Bath and Beyond or something like this, like how many times has that been tried to reboot in the last 10 years, and it was declining. They got a new CEO and they're like, look, our problem is that we don't have enough private label brands, which isn't, like a margin question. And
Right.
meanwhile, they like removed all the national brands, which were the only reason people were walking in the door at all.
Right.
And so it just sort of accelerated their decline. Um, Bed Bath and Beyond, yeah, sure, maybe they had a margin problem, but more they had that people have so many options now to buy home goods everywhere. And so what does Bed Bath and Beyond really stand for? And I think that really applies in fashion as well. It's like, what do you stand for? Who is your consumer that you're going after? Are you proud of that? And can you help your customer identify with your brand? And to make them loyal followers of your brand so that they adopt new lines. And the reality is the pace of new line introduction has to be faster because that's just the way the market is now.
Yes. Yeah, absolutely. And I think that, some people who are running a more savvy retail business are seeing stores as the opportunity now, where they used to see stores as sort of like, the weight around their neck, and e-commerce was going to be the thing that, accelerated their growth. So
Yeah.
now that people are or sort of heading back to stores at the moment, how can e-commerce, or particularly people who have a heavy investment in e-commerce, how do they create that connection? How do they create that experience that's somewhat easier to do in a physical store than it is online?
Yeah, I mean, look, I think first of all, I've always fundamentally believed that who your audience is and the content that you produce as an e-commerce brand is one of the most important things you can do, because your content, meaning like your post on Instagram, your visual imagery, the videos you produce for social and on your website, that tells the story of your brand, how people are supposed to use it, how people are supposed to make decisions about it, why it should matter to them. All these things are so important because that's your storytelling. And whether you have stores or don't have stores, your e-commerce website, that's the digital heart of every brand. That combined with obviously your social, you know, TikTok and Instagram and all these things, that's really the digital beating heart of your brand. And if you don't have that, then that needs to create excitement and relevance, um, you know, in the lives of your consumers. If you do have retail channels, then I think the biggest shift we've seen, like whereas people used to think 10 years ago, like, oh, which channel got credit for this sale? Did online get credit for it, or did the store get credit for it? I think more and more new brands are starting to have kind of a one customer mentality. Is like, how does their website visit support their visit to the store, and how does their store visit support coming back to the website to get the next line, or to learn more about the brand and feel good about their purchase, and see the newest line in one place, maybe if their retailer doesn't have it.
Yeah, I think that makes a lot of sense. And I think that that is definitely going to be game changing for a lot of people who are multi-channel, is, like you say, being able to sync up all those channels and make it just a seamless brand image and a brand experience across all of that.
Right.
Now, I understand that you played a foundational role in creating the WHP platform. Can you tell us, WHP Plus platform, sorry. Can you tell us about the platform and what differentiates it from other platforms or marketplaces?
Yeah, so I mean, this is a platform that was built for a specific private equity firm called WHP Global, and there's a lot of proprietary things in here, so I'll speak kind of in generalities,
Okay.
um, as generally for it. So it's not sold independently. Basically, WHP Global, what it does, it's a brand licensing business. It buys IP for assets, and there are a few players like this in the space. And what they wanted was a platform that would allow them to manage the brands that they acquire more efficiently, both online, digitally, and offline in stores. And so the what differentiates it, it's a set of software and services designed to manage a family of brands. And so as brands are added, then the employees they're obviously running the business, the whole thing isn't software, can do that very efficiently. And it's designed for an IP licensing business. So in those sorts of businesses, the private equity owners own the intellectual property named for the brand, and then many of the operations are outsourced to partners, whether they're retailers, et cetera. You may have even seen recently that WHP Global acquired a share in Express,
Right.
and they were actually one of the acquirers of Bonobos. And
Right.
so all of these things, as these, which is from our earlier discussion. So essentially, it's very different managing one brand at a time,
Yes.
where which a typical founder would think of. Whereas if you're an investor and you have a family of brands, your software needs are a little bit different. And so that was the kind of architecture that I helped them set up. And it's not a marketplace per se, because these brands aren't selling in the same place on this platform. It's meant to have, so that they can have their own individual experiences, but to make the company efficient, to manage them all and as easily as possible.
Yeah, that's really interesting. And it's interesting to see how just the management of brands has now become, it's just evolved in a different way than what we'd been seeing before.
Right. No, 100%. And I think it's gonna keep happening. I mean, there there are a lot of brands. I mean, if you look at what's happened in malls in the past 20 years, there are a lot of like small and mid-sized brands that used to play in the middle of malls,
Right.
and a lot of these brands, there's not a home for them anymore, particularly in these like B, C, D malls. Um, because most of the anchors have either gone out of business or they're declining, or they're moving to the suburbs, and then there are these sort of like more regional, um, kind of open concept malls, more than the old traditional malls. And there's still a lot of brands that haven't adjusted to that fully.
Yeah, it's interesting. It'll be interesting to watch how all this evolves, particularly now that we've seen e-commerce has become just part of our lives, but at the same time, physical retail has come back, and now possibly malls might, see the sunshine on them again. So it'll be interesting to see how it all evolves and how everybody plays together.
No, I totally agree. And I think all of us are, you know, there's one thing in predicting the future, or trying to plan for it, but I think everyone is also trying to create it as they can. Like, can we build what the future is going to be by doing things that are right for our customer?
Yeah, and I think that's really foundational in what's right for our customers, because I think that's where we sort of lost the plot for a while.
Yeah, I agree as well.
Well, Rick, thank you so much for sharing so many insights around e-commerce. I mean, people really are very interested to figure out how to get it right. So it's just been wonderful to have you on the show and really get your expert opinion. Now, I'm sure a lot of people would like to reach out to you and probably have their own questions that they'd like to ask. Where can people find you and how can they connect with you?
Yeah, I mean, there's a couple of different ways they can connect to me. I have a website that people can check out. It's rmwcommerce.com. You can find me on LinkedIn. Just search for Rick Watson, and I'll come up there. And of course, I wouldn't be a good podcaster if I didn't mention the Watson Weekly podcast, as well, which is someplace you can follow me. But feel free to find me on LinkedIn and send me a direct message. That's certainly an easy way.
Well, that's perfect. And I'm going to make sure all of those links are in the show notes. I would encourage our listeners to reach out to you. Definitely listen to your podcast. I've listened to a couple of your shows and they're fabulous. And I gotten a lot of inspiration from you. So thanks again for joining us here on A Seat at the Table.
Thank you so much. I really appreciate it, Jane.